Welcome, class. This is a video describing how to complete the practice problem, specifically about the concept of discontinued operations and preparation of the income statement. So we are looking at the problem as presented. It's a Excel spreadsheet to make it a little easier for you to use. And I have mixed up the trial balance, but I have given you some information about the sale of a piece of the business, in this case a bank. And so we're needing to make an income statement from the trial balance. All items have a normal balance. The information that we need to make a decision is there in number 2. They sold the segment of his business that will result in a shift in strategy, and as indicated in the codification, that is sufficient for there to be a discontinued operation disclosure. So that means that that's what we are dealing with. The sale closes on December 31st, 2017, so we'll record it in 2017. Net assets are $420, sales price is $450, so the actual sale is going to be a gain of $30. Tax rate is 40%. The sale of the segment is not reflected in the trial balance above, so that we are going to have to put that gain in our income statement even though it's not reflected on the trial balance. Revenues and expenses are assigned to the discontinued segment are listed as percentages. So you'll see that above we have various percentages listed out to the side. The items that are not, where there's not a percentage, are entirely going to continue. Only those that have percentages are going to be those things that are discontinued. So let's look at how we might work this with an Excel spreadsheet. So first I want to do is make sure I know what the income statement looks like before we separate the discontinued operations. So here's my revenues and the total for those. And then below that are the expenses as given on the trial balance. And you see the various items there and the total, some other losses in there, and then you have income before taxes, the provision for taxes or tax expense, net income, and then as we've discussed, non-controlling interest is the part of the business that is owned by or the shareholders that don't represent a majority of the stock. So if we own a subsidiary and we own 80% of that subsidiary, the other 20% is what is referred to as a non-controlling interest. So we separate that out. That's their part of the net income. And then in keeping with our earnings per share calculation, which is net income, subtract preferred dividends, getting net income for common shareholders, and dividing by the shares outstanding, you get earnings per share. And this is weighted average shares outstanding on the bottom, and that was given to you in the trial balance information. Now, once we have an income statement that looks reasonable, then we can go ahead and separate it into discontinued and continuing. So remember those percentages, we're going to apply to each of the items where the percentages were given, and those would be our discontinued. So you have a column. The easiest way to do that is just a column with discontinued, and then below that the expenses that were discontinued. So for the part that's being sold, the revenues for 2017 were 1769.77, and then the expenses were 1560.35 as we total them. Take the difference and we summarize that entire discontinued operation down to one number of income, subtract out the taxes as a percentage given, and end up with net income for the discontinued operation. Now, over in this other column is the continuing operations. We then do the same thing, add up the revenue after subtracting out the discontinued, and the expenses, losses, and so forth come over because most of those were fully continued. Then we have a income before taxes, the taxes minus the part that was discontinued, and income from continuing operations of 2100.18. That does subject to a earnings per share calculation, because any special items or subtotal before special items, you have to calculate the earnings per share. So in this case, we start with the income from continuing, that's the name. If there is a discontinued operation, we use the term income from continuing operations. Now the discontinued operation is going to be one number on that income statement. You'll see in my formula, it is the amount from the discontinued operations plus the $30 million gain from the sale of the segment minus the tax on the gain on that sale, which would be 40% or 12. So that would mean that we are adding 18 to our discontinued operations we calculated from the income statement. So our total discontinued operation, one number to summarize all the revenues and expenses and the gain or loss from the sale of the assets. We disclose the amount of tax that was part of that. So that tax is the 83.6 or 84 plus the 12 on the gain, a total of 96. So we put that kind of as a description right on the face of the income statement. We do an earnings per share calculation, dividing the 144 by the number of shares outstanding. We do the same thing with the non-controlling interest, has now a earnings per share calculation. Net income attributable BBT, we subtract out the preferred dividends, and then we divide by the earnings per share one more, the number of shares outstanding one more time to get the 281. All right, so you see that it changed, and that's solely because of the gain on the sale that was not originally recorded in this trial balance. If there had not been that gain, or the gain had already been recorded in the trial balance, then even with the new disclosures, you would not have a difference in our earnings per share or our net income for common shareholders. Now, this income from continuing operations plus the discontinued operations minus the non-controlling interest should equal your net income for common. Now, in this case, we're off by a penny because of rounding. All right, and then you'd probably fix that rounding issue by changing it by 1 penny to make it all add up. So that's how you check to make sure your earnings per share calculations are correct. So this is a good review of several concepts from this week's material. First of all, the idea of discontinued operations. Second of all, how we see non-controlling interest on the income statement. Third, the calculation of earnings per share, especially with a special item like discontinued operations. So those are the things that you should get from this review and hopefully this practice.